Imagine waking up tomorrow to find your portfolio either skyrocketing or plummeting due to a geopolitical shift that caught everyone off guard. In 2026, the ongoing Iran conflict presents both unprecedented investment opportunities and significant risks that could reshape your financial future. Stay tuned as we navigate through the potential financial landscapes impacted by this conflict and discover how you can position yourself to benefit. In this video, you'll learn about the sectors poised for growth, the risks that could derail your investments, and actionable strategies to safeguard and potentially grow your portfolio. Let's dive right in. Now, you might be wondering, why should I care about the Iran conflict in 2026? Well, the reality is that global events have a profound impact on financial markets, and the Iran situation is no exception. But before we dive into the sectors and strategies, let's quickly recap the recent developments in the region. The Iran conflict has ebbed and flowed over the past several years, with tensions escalating in 2025 due to diplomatic breakdowns and regional power struggles. In 2026, the situation remains volatile, with ongoing sanctions affecting Iran's economy and its oil exports, a critical part of its GDP. These geopolitical tensions have implications not just for Iran, but for global oil supply chains, regional security, and international trade. But here's the kicker. Despite the turmoil, there are unique opportunities emerging for savvy investors who know where to look. Let's explore these opportunities first. First up, energy stocks. With Iran's oil exports limited, countries are seeking alternative sources for their energy needs. This demand has benefited energy companies outside the Middle East, particularly those in North America and Europe, who are ramping up production to fill the gap. Companies involved in renewable energy are also seeing increased interest as nations push for energy independence. Keep an eye on firms like NextEra Energy and BP, who are investing heavily in renewables. But that's not the only sector to watch. Defense and cybersecurity firms are also in the spotlight. As tensions rise, governments globally are increasing their defense budgets. Companies like Lockheed Martin and Raytheon are experiencing a surge in demand for their products and services. Additionally, with cyber warfare becoming a critical component of modern conflict, firms specializing in cybersecurity, such as Palo Alto Networks and CrowdStrike, are poised for growth. However, the real estate market in neighboring countries is another area of interest. As instability looms, countries like Turkey and the UAE are becoming attractive for real estate investments, with investors seeking safe havens for their capital in stable regions. But wait, before you rush to invest, consider the potential risks that could impact these opportunities. While the opportunities are enticing, the risks are equally significant. One major risk is the potential for further escalation into a broader conflict, which could destabilize the entire Middle Eastern region and disrupt global markets. This could lead to increased volatility in stock markets worldwide. Moreover, economic sanctions on Iran could lead to retaliatory measures that impact international companies doing business in the region. This could result in supply chain disruptions, affecting industries far beyond energy and defense. Currency risk is another factor to consider. Geopolitical instability often leads to currency fluctuations, which can impact the value of your international investments. Keeping an eye on currency hedging strategies might be prudent for those with significant exposure to foreign markets. But here's the silver lining. By understanding these risks, you can take proactive measures to protect your portfolio. So, how can you capitalize on these opportunities while mitigating risks? First, diversification remains your best friend. By spreading your investments across different sectors and geographic regions, you can reduce the impact of a downturn in any single area. Consider allocating a portion of your portfolio to commodities, particularly gold and silver, which traditionally serve as safe havens during times of geopolitical uncertainty. ETFs like SPDR Gold shares can provide an easy way to gain exposure to these metals. Another strategy is to invest in government bonds from stable countries. These instruments offer a relatively safe investment with steady returns, even during turbulent times. Lastly, stay informed and adaptable. The geopolitical landscape can change rapidly, and being able to pivot your strategy as new information emerges is crucial. Subscribing to reliable news sources and financial analysis can help you stay ahead of the curve, but that's not all. Let's discuss one more critical aspect before we wrap up. In today's interconnected world, staying informed about global events is not just beneficial. Set up news alerts, engage with financial communities, and don't be afraid to seek professional advice when necessary. Knowledge is power, and in 2026, it can be the difference between capitalizing on an opportunity or facing a loss. So, what's the bottom line? The Iran conflict presents both opportunities and challenges for investors in 2006. By understanding the geopolitical dynamics, identifying potential growth sectors, and employing strategic risk management, you can position yourself to navigate this complex landscape successfully. Remember, investing always carries risks, and it's important to do your own research or consult with a financial advisor to tailor strategies to your individual needs. If you found this video helpful, hit subscribe for more insights into global markets and investment strategies. Drop a comment below with your biggest takeaway from today's discussion. Keep your portfolio diversified, stay informed, and remember to invest wisely.